Hi, I'm Ray Meadows, and with me is my friend Hiromi, who's going to ask me questions about investing.
Many questions.
I'm ready.
Okay, so how do I get started investing?
Okay, well there's two ways to go. One way is to just buy a mutual fund directly from a mutual fund company. So for example, Vanguard or Fidelity or someone like that. You just go to them and you can open an account and then you just buy fund shares directly from them. So that's one easy way. And then another easy way would be open a brokerage account at someone like Fidelity or Schwab, and then you could buy an exchange traded fund on the market. So you would put an order in to your stockbroker and then they would buy that security for you in the stock market. So those are the two ways that you could do it.
But what's the best way for me?
Well, the best
How do I know which one to choose?
Well, I think it depends on you. If you want to make it like a fun little game, you can do the trading because people find that exciting. But if you just want to have a simple process and invest your money, then I'd say mutual fund would be a good way to start.
Oh. What's a mutual fund?
A mutual fund. Glad you asked.
You say it so easily, but...
A mutual fund is when a manager puts together a pool of investor money. Other investors like you put their money in, and then he takes that money and puts it in individual securities. That could be bonds, it could be stocks, whatever. And so he's creating a portfolio for you, and you're buying a share of the portfolio. So what happens is every day they said, oh, these securities that we bought, could be bonds or stocks, at the end of the day the price was this. We add them all up, divide by the shares in the mutual fund, that's the price you pay. So you're basically buying one little slice of this big portfolio that they created for you. So that's what a mutual fund is. It's just buying a portfolio that someone else is managing for you.
I don't know how it works.
Well,
okay, so I put money, right, into, let's say, a mutual fund. I have 100 in there. Then what happens? I just sit back?
Yes, because let's just say that you bought a money market fund at Vanguard. Then the fund manager is investing that money in short-term bonds, say treasury bills, in other words, government obligations that pay interest of some rate, say 1%. And so over time, that interest is building up and eventually it either increases the share price of your shares or they pay out some cash into your account as interest. So typically they'll pay out cash into your account either daily or monthly.
So money is growing?
So money is growing. That's
and
exactly.
I'm not doing anything?
And you're not doing anything.
So just put money in there?
Yes.
Keep putting in there?
Right. Keep putting in there until you have about $2 million, and then the interest will be so high you can go live on an island somewhere.
I want that! That's my goal. So we can go have fun.
Okay, so just keep saving your money, put it in there, builds up, you add more, and eventually you retire.
Okay, I have to go do that right now. Okay, so bye-bye.
That's it for today.